I'm not much of a mind reader, but my own guess and my own knowledge, and we all know this, is that the rates have been rising since May of this year, actually for a lot longer than that. And that's because inflation has been picking up. Now, it's a little bit like the American guy who goes and kills a woman with a fork, and the lawyer gets up and says, well, actually, it wasn't murder, and that's because murder does not consist of killing people with a fork. It's only with a knife that you kill them. So what I'm saying here is that the inflation, as we read about it, is not being measured properly. The inflation that we have is very alive and kicking. It's not because of the stuff that we all, as economists, learned about, which is this demand pull inflation. It's much more of a cost push. It's called good old-fashioned greed, basically. What I mean by that is, of course, the rising commodity prices, the rising rents, things of this nature, which have very little to do with demand anyway. So my reading is that the Fed itself doesn't really, it hasn't really been able to fan inflation, nor has it been able to actually stem inflation. That actually is being done by US Congress, of all people. Now, why would that be? Well, I'm not sure if anybody here knows, maybe somebody here has a guess. You know that there's a school of fish, right? What about baboons? What's the context of baboons? If a school is to fish, what is Congress? Sorry. It's a congress of baboons, and congress, apparently, according to the Latin, as Peter Churchhouse well knows, means hostile encounter, which we've never had. And so I think that gives kind of a frame for what I'm thinking, having dealt on Capitol Hill for some years myself, that by not getting their fiscal act together, it's Congress itself who are fanning the distrust, the suspicion of U.S. federal debt markets and also local debt markets. And that, in my mind, is what's going to keep on driving those U.S. long rates up much more than the Fed, even if it were to stop the tapering. That's only 85 billion a month. It doesn't mean that I have it in my pocket, but just to put into perspective, the daily turnover of the foreign exchange market is $4 trillion. That means that twice a week you have the equivalent of the US economy being turned over. Now, I don't have the exact figure for the US bonds in my mind. What I do know is that the US bond market is 7 times the size of all the other bond markets put together. So there's quite a bit of trading going on. Where I'm going with all of this is very simply that the 85 billion that we've had, that we've been discussing, that people are very worried about, I'm of the view that that's really less relevant than the pure sort of the signal effect that the Fed's been giving. But as a friend of mine from Warburg said to me a few days ago, again, it's you are buying the rumor and you're selling the fact. In other words, I think that the Fed tapering story is going to become a little bit anachronistic. It's something that we've talked about, that we've read about. It's happening. It's a little bit like 1997. We all got worried about it before the handover. Once the handover came, parties were thrown. So my view is that what this means for currencies is very, very simple, really, that with the US rates continuing to rise off the back of mistrust, off the back of suspicion, not because of what Big Ben is doing, I'm of the view that you will find the US dollar continuing to rise very, very strongly as far as you can with this huge market. Remember that it takes a lot more to push the dollar than it takes to push the Macanese pataka, of course, because the dollar is just a little bit bigger. And so that then would also suggest that the renminbi will continue being a very favored currency because it's obviously linked a little bit to the US dollar. As we know, the Hong Kong dollar is and will remain. I have to put in a plug again for the peg. I think it's a great thing that John Greenwood reinvented for us over here. And this, of course, then, however, means that the Asian currencies, the non-Asian, the non-dollar currencies are going to go like this. They're going to get crunched. Now, why would they get crunched? Well, they're going to get crunched because we've got a trash crash looming. And a trash crash just means that chaos always, by etymology, comes from something out of left field. You just don't know where the hell it's happened, why it's happened, and we all kind of have our own guesses as to why a crash could come. I myself believe that the world is very febrile at present, yet again. This is more instinct than the stuff that we all talk about. As somebody once said, some people use statistics as a drunk uses a lamppost, in other words, to support himself and not to support the arguments. So what I'm suggesting with this is that the trash crash, without being all statisticky about it, we've got the Middle East problems that I think we all know about. We've got the East Pacific war games that are alive and kicking. We've got the geopolitical stuff. The Russian bear, in my mind, is still alive and kicking. He's just hibernating, but he's still very much there. On the financial side, we have the shadow banking system that is, I think, sort of just waiting to crash. We've got something else called the China's local debt crises, which are going to have some issues that need to be resolved. Then, of course, our American friends are very much in the business of reinventing and repackaging those wonderful asset-backed securities. I would, as a Treasury guy, call them liability-backed securities, but whatever you wish to call them, they're there, and I think that they pose a huge danger, especially the more that these rates, the long rates rise, courtesy of our friends in Congress, the more the over-leveraged people who are run by greed more than fear will be caught in this dilemma of having to finance their over-leveraged purchases of high-yielding bonds. High-yielding, of course, meaning 3 to 4%. You can get that just as well on HSBC shares, and Maxon well knows. Okay, so but where we're going with this is that the trash crash, I think, bodes terribly for the Southeast or for the East Asian currencies. Let me just go through a couple of views there. Starting at the top, I think that the reason that the trash crash bodes very badly for the East Asian currencies, I'm not going to talk about the African currencies or the Latin Americans because I don't know a thing about them, is because when the dollar is strong, people tend to move out of these smaller currencies. I mean, if you're getting a higher yield in America than you are in Asia, and then an illiquid Asia also on top of that, what are you doing in Asia? Okay, now, but it's not just the yield differential which plays a big role. I think it's also the very simple fact that we have a lot of political problems out here that, again, we all know about, so I don't need to bore you and put you to sleep even more, perhaps. The one is, of course, the East Asian bun fights between China, Japan, and perhaps the US at some point. Then we've, of course, got then in Southeast Asia, we've got the fights with Thailand that we've all read about, and the domestic political problems there. Indonesia is not looking so hot, nor is, frankly, the Muslim threat in Malaysia or in Indonesia. So it seems as if we have kind of a lopsided trifurcation. What I mean by that is that we've got an American Congress of baboons who are being rather hostile in their encounters with Obama. So that paradoxically drives up the dollar. So that's leg one. Leg two is Japan's and Europe's baboons driving down their own currencies. And what I mean by that is that the Japanese, I think, are ossifying their way into a dead business cycle. The Europeans have welfared their way into a dead business cycle, so there's no more growth there to be expected. So that's the second leg, while the euro and the yen keep sailing down. The third thing is, of course, that the emerging markets get stuck in the middle. That's the third part of this trifurcation, whereby especially it's the Southeast Asian currencies that will have huge problems going forward because of first of all, because they're not very attractive as a currency, just because they're so thinly traded, but also because, of course, they are not they're going to have a lot of domestic political problems. And the worse that global growth gets, the more these political problems rise. Again, you know all of that, okay? But I mean, it's a little surprise to me that we've got war, political tension, warmongering going on, because that's, of course, a great reason, that's a great way of deflecting from local tensions, local problems that the politicians themselves, yet again, have created. If you've gathered that I'm not a great friend of developed democracies, you're probably right. So as a final bit to this, because I don't want to sort of bore you with this incessant talking, is that all of this bodes rather badly for your own purchasing power, for each of your own pocketbooks, because the too many people, I find, approach exchange rates really just from an economics angle. And it's certainly, when I wrote a book on currency rates years and years ago, it was very much why you shouldn't be forecasting currency rates. So note, I've not forecast, I've given you a pattern prediction that I think that the non-dollars will fall and the dollar currencies will rise, being the dollar, the renminbi, the Hong Kong dollar. But I do think that from a personal angle, what we're going to be seeing more and more is the erosion of personal purchasing power. And that's relevant to each of you in this room, in my mind. The first point to be made is that anybody here is going to be caught by a falling currency. Just because I've said that over the next, say, 6 months, the dollar will be rising, that doesn't mean that you can sort of negate the last 30 years of the US dollar. Actually, at kickoff, you paid 400 yen to get $1 or 4 Swiss francs. Now you're paying 1 Swiss franc and 100 yen to get that same dollar. It's called a huge tax rate of 75%. If you think about it, it's 75% of your purchasing power has been removed. Well, how's that? Because of what we call in economics gibberish imported inflation. You're paying more and more dollars per imported good, per yen, per Swiss franc, okay? And that's then a form of a tax which is going to continue. So in the long term, the dollar will, as a reserve currency, continue falling. Every reserve currency, laconically put, goes to hell for the very simple reason that the empire runs out of money. Well, we've read about that in America, I believe. And then they print more of money. Well, gee, that's new. So this is just a repeat pattern of what we've had before. In the nearer term, of course, we've got the non-dollar currencies falling off, especially those Southeast Asians, the Muslim currencies, if you will, are especially sort of threatened. And that's then going to bode well for people in those countries, again, giving rise to more and more political unrest. Now, what we then are all faced with, and each of us in this room, is low interest income, falling or very poorly performing stock markets. And what I mean, this is more relative than absolute, but even the US markets, I'm of the view at least, they've done very well. The economic time, you may know that I have an economic clock that I run. The economic time in America is still all right, but I do believe that many, many people have suffered under extravagant expectations, which goes to say that people are sort of expecting everything to zip up and zoom down, and maybe that's not how the world works anymore. Maybe it's all very slowly does it, and gradual boring stuff, of which you can't really do a whole lot of trading, but trading is of course happening. So I think what we're going to find there is less extravagant expectations, lower interest rates, stock market returns not boding so well for before, and then of course inflation coming back. Now again, just because it's not being measured does not mean that it doesn't exist. Or put differently, I'm a bit of a misandrist, which goes to say that just because you can't explain something to death doesn't mean it doesn't happen. I mean, the fact is that still something is there. So in conclusion, what I'm really suggesting is that we still have economic cycles in East Asia and in America. We have out-politicized them in Europe and in Japan. This goes to say then that we will find that the rising rates in America are going to continue picking up despite what the Fed does. Now, I don't think that Big Ben wants to do a whole lot, because I'm of the view that he knows how disruptive any announcements can be, especially if he does decide to pull the tapering or to do the tapering. The second thing is I think that there's a trash crash in the offing for all sorts of left field reasons. That then in turn suggests that especially the emerging markets economies will be hit, and particularly the Muslim Southeast Asian currencies. And finally, we're going to all end up with less and less spending money in each of our own pockets because of rising inflation, lower interest rates, and lower stock markets. And so where the investment refugees should head, in my mind, very much is, first of all, they have to get some decent advisors to help them out, but also on top of that, I'm a great believer in the multinationals. If you think about it, the multinationals are the best run funds in the world because they do everything that you need to do. They worry about the currencies, about the product mix, about the product cycle. All of this stuff is being done by multinationals anyway. So if you have a few high yielding multinationals, then why not just go with them? Stop trying to be clever. Greed has always been, as I've always suggested to my dear wife, a rather bad counselor. So that's really enough of what I wanted to sort of just say. As my mother-in-law taught me, I know my views, so tell me yours, please. Thank you.
We're going to open it up for questions. If you could just raise your hand, and we'll have a thank you, Ben Pedley over there, HSBC.
Yeah.
Can we get a microphone for Ben, please?
Hi, Enzio. Thanks
you.
very much for the presentation. Just
Thank you.
wondering, when we talk about Southeast Asia, Singapore is obviously by some seen as a bit of a safe haven within the region. When there's troubles in Indonesia, money flows into Singapore property, basically. I'm just wondering, if this trash crash does eventuate, is Singapore going to be a safe haven, or is it going to be seen more as a proxy, a more liquid way of hedging your exposure to some of those, poorly performed nations, in your view?
Well, I'm afraid it's more the latter. I think it's more of an ATM. I think that you'll probably find more of the other money from what we used to in my Smith Court days call the nice house in the bad neighborhood, that more money will come back into Singapore from the Indonesias, the Malaysias, etc. of this world. I don't know anything about Laos and Vietnam and Cambodia. But I think that ultimately, hey, it's liquid, let's get out, is going to be the theme, because you can't, in my day at least in broking, this is grandpa talking pre-century, we used to, of course, hope that, well, gee, the emerging markets will rise when the US goes to hell because after all it's a wonderful offset. Well, that's all complete nonsense. It doesn't happen that way. So whether we want it or not, so I don't think that they would push Singapore up and the others would, whilst the others are falling off. I just don't, sadly, I can't.
Yes, please. Over here? Yeah,
Peter.
Thank you.
Hi, Enzio. Pete Churchhouse. Two questions or comments. Firstly, could you comment a bit more about Japan, Abenomics, and the yen? And secondly, the prospect of currency wars, because we are definitely seeing certain countries deliberately manipulating their currencies down, or certainly wishing them to be down. What's the prospect for currency wars?
I think Japan is at war. And what I mean by that is that I think that the currency wars, what we used to call in our day, Peter, the competitive devaluations, that was also pre-World War I stuff, that's already been happening. Abenomics I've never been a friend of, because he's had these three arrows. But when it comes to structural reforms, I get back to my baboons in Congress. The people, whether they're in Brussels, in Congress, in the US, or in the Diet, they're not doing the political reforms that are necessary and the structural reforms to get the place moving again. And so everybody's relying on monetary policy. So Kuroda comes out again saying very sagaciously, well, gee, we got to keep on keeping the stuff nice and easy. And then Draghi says the same thing. But basically, it's like rowing a boat with one oar. You can't be the helmsman and the guy who's pushing the boat at the same time. I mean, even I know that, even if Peter's the sailor here, okay? The second point that I would make is that currency wars are already alive and kicking in my mind. They're just put a little bit more nicely, they're put a little bit more diplomatically. But the fact is that, say, the yen, which was at 400, went down to, say, 97. I'm not going to dazzle you with my lacking memory. now is at 101 or something like that. I think that it's going to probably move back up to 105, 110 on a 6-month view, precisely because of this myth, and I repeat this is the last speech I gave at the Foreign Correspondents Club. It's a myth to believe that low currencies drive trade surpluses and drive growth up. If that were the case, then why do the weak currency countries have deficits and the strong currency countries have surpluses on the trade balance? It's not quite as simple as all that, okay? But the myth is low currency helps exports, rejuvenates growth, even if I myself have never quite believed in that story. The fact is that that's a nice politically saleable thing, all those bad foreigners. And so we're going to have the currency war continue, and that's why I think that especially Japan will be leading that battle. On top of then the added sort of nice excuse, which is that currencies have to depreciate, of course, because we have all of these political tensions going on, such as North Asia, Japan, Korea, China, such as the Muslim problems in Southeast Asia, all these things that we all know about already.
Let's talk about that a little bit. You have geopolitical concerns in this region, no doubt, with China just coming out and putting out new airspace borders and telling Japan you can't cross them. So you have that ratcheting up, and then at the same time, you have Iran in this incredible deal that historically people are pointing to as a rapprochement with, in the same vein as China and Nixon. The U.S. basically brokering a deal with Iran and possibly, coming within 6 months to a more formidable deal. So you have one neighborhood calming down and another neighborhood, which is where we live, ratcheting up.
Well, I think that wars always need fights. I think that we should have more of an andocracy. In case you don't know what that means, I didn't either. It's the opposite of the ginarchy, and the ginarchy in turn means women who rule. Not a matriarchy, that's even worse. I live in one myself. So what I'm saying with this is that I think that a lot of this unthought through face-saving aggression is coming out here. I have nothing to add to what's going on. I mean, we all have a view on these issues. I kind of hope that the East Asian thing goes away. I'm afraid that the reason that I always call this laconically the Middle East is because I think that the fewest people, I certainly don't pretend to know a thing about it, really understand the whole. They don't really have much of what I call a circumference of ignorance with the Middle East. In other words, what I mean, they don't kind of know what they don't know. They all think it's all just Shiites against Sunnis or something simplistic that fits into a nice little cookie cutter. I wish it, even just as an armchair analyst, wish that it were that simple. I don't think that it is. So I don't think that problem is going to go away. With China and the airspace, I mean, we've all got our own thoughts. I'm not going to bore you with mine.
Thanks. That's David Lyne from the EIU. Get your opinion on the likelihood, if things pan out as you say, of more strict capital controls being introduced in some of these vulnerable Asian economies and what the implications of that might be.
I think that once you've let the genie out of the bottle with capital controls, it's going to be very difficult to push them back, to put the lid back on, to put the genie back into the bottle. If anything, China is easing its capital controls, which I think will continue because I think that they want to become more of a reserve currency. Now, in my mind, that's going to still take many, many decades to come, because until you have a rule of law, it just ain't going to, it cannot work in my head. But I don't see the capital controls coming back in Southeast Asia because, yes, there will be a trash crash. I'm not sure that it will have the gravity of the currency crisis. I can again only work from the perch of Hong Kong these days, which is I don't think that the banks, maybe this is fingers crossed, maybe I've gone to prayer school too long, that the banks in Southeast Asia are as exposed as they used to be to all of this over-leveraging. Now, I may be totally wrong on that, and if somebody has a much more considered view, please tell me, but I don't see, so my view is that as I don't see the over-leveraging as being such an issue here, I think that we're not going to see as many that we won't see the necessity for capital controls coming in, besides which I don't think we could impose, they could impose them because the genie's out of the bottle already.
Richard Wallace from INDX. Enzio, you talked earlier about short-term dollar strength, long-term dollar weakness. Can you give us a clue on your thoughts on timing of that switch?
I knew you'd ask that.
Sorry, Enzio, you know me too well.
Well, shall we say within 30 years, Richard, which is the last 30 years of history. That's a good one. Let's say, okay, I'll give you an idea with the economic clock. Let's say that America's excess supply of money continues. In other words, there's more of the stuff floating around. That helps the stock and the asset markets. It doesn't help the mortgage markets, of course, because of the rising bond yields. But let's just keep it simple. The excess supply of money continues driving the stock market upwards, maybe not as strongly as it has hitherto, but still moves up. That on a 12-month view, there's nothing magic about Christmas, Richard. This is 2014, of course. But on a 12-month view, that would stabilize global economies. We've done the trash crash. Things have come back. They've got the right footing again. The emerging markets start moving up again. And so things start looking a little bit better. At that point, then the dollar starts its descent yet again, down to, say, 75 on the yen. That's now on a 2-year view, about which time we're all dead, right? So the view would be that over the coming year, it's going to be more of a 6-month to 9-month to 12-month, a dollar year, and then it moves back to reverting back to the mean, back to the pattern prediction that the reserve currencies will go back down, and that's very much with the dollar, because again, I don't think that the baboons in Congress are going to come to any deal. I think that people again are expecting big deals are in the offing. Well, having done a little bit of Capitol Hill for many years, I just don't see that happening. I think you've got too much going on. So that means that the dollar then trundles back down. This is then with the emergence more of the Australian dollar becoming more popular. In other words, more choice being created. And that's really what this dollar weakness is going to be about, is that you can start moving into other currencies. Note that I'm keeping the euro out of it because I think the euro I call the neuro. It's got a huge bunch of internal problems. The Germans with a very outdated war guilt, which is not to be dismissed, but I mean, it's still there. So they're being taken for a ride. The Greeks thinking, well, we can just sort of get the stuff for free. Now everybody getting ticked off because their entitlements are being thrown out of the window, or maybe being thrown out of the window. So again, my view would be, as of 2014, you'll start seeing the other currencies strengthen again, in particular the non-Japan currencies. Yes, Anna? Bitcoin, I have, sure, gold and Bitcoin is what you want to know, right? Well, I'm glad to be consistently wrong because you can at least bank on that. I've been wrong on the gold price for the past year because I've kept on feeling that gold actually would be an appreciating currency, or, excuse me, an appreciating metal and not a depreciating one. But perhaps that's because I see gold totally differently to at least many people. Gold is not an investment. It's an insurance policy. And I don't ever hear about people talking about their insurance policies going up or down, but I do hear about people talking about their investments going up and down. So I believe that if you agree with my view, which is just one view of thousands, that the problems, the geopolitical stuff, the competitive devaluations raised by the economist over there, that's going to continue, then I think that gold actually will turn in its nominal price faster than people think in US dollar terms. In local currency terms, of course, in non-US dollar terms, it keeps on getting more expensive anyway, because if the rupiah keeps falling and the ringgit and the, stuff like that kind of thing, then of course you're going to be finding a rising price of gold in local currencies anyway. Bitcoins, frankly, I have nothing to say because I haven't really studied this. I mean, I know that it's a type of German beer, but that's all that I can tell you. Sorry.
I think we have time for 2 more questions. Yes, please.
Thank you. Hi, Enzio.
Yeah.
It's very interesting. Can I ask a slightly different question? You've talked about investments, and I think that most of us have either lost money or know people that have lost their savings, etc. Do you have any advice on what you can do to avoid that, or where you could put money as a safe haven or something of that sort?
Well, I don't think that I stand alone in feeling that many people, we always have been told of the fear and greed, and there's in fact a very good analyst called Chris Wood who's been running this one for years at Credit Lyonnais, securities of course. I think it's greed and suspicion that drives many people into what they sound they're a little bit like fool's gold. They sound like wonderful investments, and then you actually find out later on that you didn't understand what the hell was going on. You didn't understand the fees, you didn't understand any of the stuff, but you were told it would really pick up. Okay, so I think that the solution is to, first of all, take some self-responsibility and learn about your own finances more than just saying, well, let me leave it to the experts over here, because the experts often have their own agenda. I think we all kind of know what that would be. Secondly, of course, there are some guys around who will give one an honest shake as providing independent, non-commissioned advice. And thirdly, the whole idea that you have to really monitor your own investments on your own. No good just leaving it to the individuals themselves. So I think it's very much the whole idea of trying to find objective advice, learning yourself, and then also taking responsibility for your own investments, as opposed to just saying, well, that bad advisor over there, it wasn't his or her fault that you didn't read the prospectus, sorry.
We have 1 more question to go. If anybody has I'll ask it. Oh, you ask it. Thank you. Right over here.
India has been a
Yes,
very
Jeremy.
frustrating investment experience for me. India has been a very frustrating
Ah.
investment experience for me. Do you have any views on whether my frustrations will continue?
I don't know your psychology anymore, Jeremy, but I don't know, to even say much about India would be highly arrogant, because I don't know a damn thing about it. I've never even been there. What I think the good news is that they have a positively brilliant central bank governor, but again, I think that he's probably a Roman with one oar. And so I don't, again, so much of this cultural stuff is a software issue. It's not this wonderful male think in a box, this is how it's going to work, ABC nonsense. And I don't think that software problems get solved that quickly. I'm told that the Indians are not the world's most organized people. I don't know. I'm not saying that facetiously. We, of course, know that there are many, many cultures there. So I'm not, it just sounds a little bit, to me at least, from afar, too disparate to really think that it's going to become sort of one big hunky-dory growth story. But again, I really would defer to anybody here who knows what they're talking about, because I proudly proclaim my ignorance on that one.
Well, despite that admission of ignorance, we forgive you, because the rest of it has been fantastic. Enzio von Pfeil, thank you so much for sharing your thoughts on everything from currency wars to geopolitical black swan events that might be coming up.
Yes.
And hopefully not a trash crash, but at least we'll be all prepared for it, because we heard it here. All right. Thank you so much, Enzio.
Thank you.
I'd like to just present Enzio with a parting gift on behalf of FCC. Thank you all as well for attending today, and hope to see you at the next event. Thank you so much.
Thank you.